So feels like I'll go directly to the business of the day. I want to redo that class, the AMD class. I saw that a lot of people got issues today. There's also something else. I think it will be a good place to start, because I saw people being confused kwa group, wanashangaa what's really happening. Can you see my screen? Good. So before I get to the AMD, I want to, so first of all, there are people who are here when this is their first time to be here. If this is the first time you are joining the class, give me a thumbs up. I see how many we are. If this is the first time, your very first time to join our class, only 2 people. So okay, I don't think that is enough to redo the whole class. What you do is that in the group there's a pinned message where you will see a folder. Now in that folder we have 2 PDFs. The first PDF is the first class, the second PDF is the second class, and then you will check my YouTube channel. I have uploaded the 3 classes we have done so far. The 3 classes we have done so far, they are in my YouTube channel. I want to share that channel as we continue. I don't intend to take time here, just some few minutes, and then we will be out of here. Okay, I have shared the channel kwa group, so that you just allow me to make you float today, because of course this is tushatoka kwa basics. A lot of people here now understand 1 or 2 things, so you will check that link and then you go through it. But now, for the sake of those who have been here, I want us to continue with something. So I wanted to teach you something today. We are doing that that topic here, AMD. I saw a lot of people getting confused, but before that, let me teach you this thing. Every Sunday after the market closes, every Sunday, no, not Sunday, wait guy, every Friday every Friday after the market closes, not every but most of them, on Monday you will see something like this. Can you see this? It's called a gap, a market gap. This is called a market gap. So every time you see this, now what happens is that the market will not do anything else unless it first closes this gap halfway, and then later it must be closed completely, like 100%. So those who are following, I sent you these setups. I'll show you my trades today. I don't have anything to hide, so I'll show you my setups today. But I sent these setups, and for GU I was buying, for EU the same thing. If you look at EU, you can see this light. Can you see this gap here? So what happened is that, because I'll still go back to that our strategy, the strategy that we are supposed to use, but this is to tell you that every time you see a gap like this, the next thing you look at is the closest order block or breaker block. Now that is what you're going to look at today, because watu walisahau na that concept. Order block or breaker block. There was an order block here actually. And the first thing you do once the market gets to your order block is to buy or sell according to how the market did its thing. And what are you targeting? First, if you're conservative, target the 50%. I'm telling you, that day the market will not do anything else until and unless it covers at least 50% of that gap. And at the end of the day, this gap must be filled 100%, because this is actually another FVG. All imbalance. It's the same thing. This is imbalance, and the market must come back to balance this. So that is how I got my trades today. And every time I see the gaps, I milk money like I nachukua pesa pahali. It has happened again and again and again. It is like unaokota pesa. Ukiona hii, the moment you see this, ni kama umeokota pesa. So I was also doing some analysis for USD JPY. Can you see this? There's a guy, Yeezy. Is Yeezy in this call? Ako hapa, that my good guy pale kwa group. Ako hapa kweli? I'm not sure. He had taken a trade, and I had advised him aweke take profit kwa hii this liquidity here. Can you remember that trade he sent on the group? Now imagine kama angehold hiyo trade on Friday. So leo kuamka tu angeamka na 132 pips. Kuamka tu 132 pips. But it doesn't matter. So this is last week, so we are not using this. But you see this gap? This gap was caused by something. Kulikuwa na news leo. Kulikuwa na elections. I think ni jana, Japan. And so I'm not going into all those analysis, but that is what caused this gap. Now, a lot of people, analytics, they are saying that this market will continue to buy, but I tend to disagree. I can be wrong, but as for me, I know. Now this is the highest high, USD JPY, and what happens is that on Mondays, two things happens. If the market leaves the high at around saa saba, this is good to note. It will help you in the future. If the market leaves a high, probably that is the highest high you will see for that week. Probably that is the highest high you will see for that week. If not that, this is the lowest low you will see for this week. Those two things. But from where I sit, because of this gap, the market can do nothing. Ndio maana, those of you that have followed this, the market has been running around this place since morning. Because yes, buyers are there, but there is a lot of liquidity over here. And so I'm still holding my sell for USD JPY, and I will sleep well knowing I can either be taken out or it will come and fill this gap at the end of the day. So I hope we have learned something there about the market gaps. They are very important and they give you a lot of money. A lot of money. I'm telling you, a lot of money. They give you a lot of money. Okay, where are we? So I'm actually still holding that my sell on USD JPY. It will sell whether it likes it or not. Even if it doesn't sell, it doesn't matter. It doesn't matter. So back to AMD. Last week we looked at the model called AMD. Today the AMD played out very nice. And so I look at two things. First, we will look at the order block, the breaker block, and then we can look at the AMD. Order block, breaker block, and then we look at the AMD. Now, if you look at this market, let's start with the daily, actually the monthly. If you look at what is happening here, the market is making a series of lower lows, lower highs, lower lows, lower highs, lower low, lower high. We expect now the market to sell and take out this lower low. Now, what is an order block? In the monthly, this is our order block. That is the last buy before a significant sell. The last buy before a significant sell. That is our order block. That is our order block. So we expect that this market must tap to our order block, and then that will be our big sell, or the sell that will take out this liquidity. But without going to all that, I want to show you in a lower time frame, like 3 hours. Now look at this. We said another block must answer 3 questions. Nani anakumbuka? Who remembers what we said? Another block must answer 3 questions. Who remembers? So I think I can call you randomly, because if you don't remember that, then I'm not sure we are making progress. If we don't remember that, we are not making progress. Okay, I've seen some answers. So I want you to tell me whether this is a valid order block. Now, an order block must answer 3 questions. Number 1, did it sweep liquidity? Thank you kwa wenye wamechangama. I can see we are getting it. So the first thing is, did it sweep liquidity? The second thing is, does it have an FVG? The last thing is, did it break structure? So if you look at this, it is swept liquidity to the left, and then it caused a break of market structure, and then there is FVG here. Newcomers, I know you are floating. I'm sorry. I hope there is a way I can help you. I hope there is a way I can help you, but go to that once you go to that link, you will see what I'm talking about. So this is a valid what? Order block. So why do we call it an order block? We call it an order block because this was supposed to, all this is where institutional traders, all institutions got into the market, because the moment they get into the market, we see all this move. That is why it is called an order block. So we expect that in the future, when the market taps into this order block, there will be a buy. Okay, that is our expectation. In the future, when the market taps into that, there will be a buy, because big institutions, they want to buy where other big institutions were buying from. So if this is where other institutions were buying from, once we get back to this place, you will see a reaction. What is then a breaker block? What is a breaker block? Very important. A breaker block is a failed order block. Don't forget that. A breaker block is a failed order block. A breaker block is a failed order block. So let me look for one here. Let me look for one. Are you able to spot this? Who can spot that? This last sell candle before a significant buy. Can you see it? My God. Can you see what I'm talking about? Thumbs up, please, so that I know that I'm not talking to myself. Good. So this is an order block. It is swept liquidity. It led to a break of market structure, and then it had an FVG. So do we agree that this is an order block? It has passed all our what? All our, it has ticked everything that it's supposed to be in an order block. So we expected that after this buy, when the market taps to this order block, we expected the market to do what? To buy. But what happened? When the market came back to this order block, it was disrespected, and the market continued to rally down. So this changes from being an order block to being a breaker block. A breaker block. Now, in Forex trading, when support is broken, it becomes resistance. Do you have anyone here who trades support and resistance? Ama sisi wote ni SMC. Mr. John, now I know you understand this. So support broken becomes what? Resistance. And it is the opposite of it is true. Resistance broken becomes support. So this order block was our support, but then it was broken. So it became what? It became our resistance. So that means because it was broken, when the market gets back to that broken order block, we expect the market to resist and continue selling. Are we together up to there? So that is the difference between an order block and a breaker block. A breaker block is an order block that has not stood the test of time. A broken order block is called a breaker block. And then an order block is where the market makers got into the market. So if we have understood that, let me see with a show of perfect. Now there are two ways you do your trade. One, it is using an order block, and two, it is using a breaker block. Using an order block and using a breaker block. So for example, this market is going down. The market is going down. Na kuna kitu tunaitaga inducement, but it's still early. We will learn about that later. We will learn about that later. Okay, so let's see how you trade using an order block. So if you look at this, how you do using an order block is you mark the high and the low. So you look at where this low, the genesis of this low, where is the high? It is this high. Okay, this is the high that caused the break of market structure here. So what you do is that you look for the last buy candle before this move, the last buy candle before the sell, and then you mark it. You mark it like that. Okay, that was the last buy candle before we got this sell. So how do you trade this? If you are a conservative trader like me, ama sio conservative per se, kama wewe ni Taliban kama mimi, you come and do your order limit here, and then stop loss like a few pips after the BB, and then where do you target? You target the nearest liquidity. What is the nearest liquidity? Oh my God, I hope tunakumbuka liquidity. Anyway, if you have a question, you'll ask me. So where could I have targeted that low? Why? Because this is the candle that took out this liquidity. This candle has all the money. So the institutions will want to take this candle out because there are a lot of orders lying here. And stop loss wameweka hapi, wameweka hapo chini. Are we following? So that is where I will target. But don't be like me. Don't be a risk taker. I want to show you how it will be easier for you to trade that. I want to show you how it will be easier for you to trade that. What you will do is, once you have marked your order block, whether umeipata kwa 4 hour or it's 2 hours, or it's daily, wherever kwenye tu umeipata that kwenye umepata your order block, go to the lower time frame. For 4 hours, I recommend you go to 15 minutes or 30 minutes time frame. Now we are looking for an entry. We are looking for an entry. We are looking for an entry using this order block here. So you will be waiting. When the market gets to your order block, you will only want to see one thing, a change of character. Okay? A change of what? Character. Can you see this? So there are two ways you can enter this. Once this candle closes, this candle here, you come and take your short position there. Where is your take profit? Just a few pips above that candle. This candle. Can you see this candle? It will never be taken out. I'm telling you. A few pips after now where that candle is. Where is your take profit? There's a lot of liquidity here. You can put your take profit there. And you can see what happened. The market came and it took out that liquidity. But if you are a conservative trader, labda una trade na pesa ya nini? Na pesa ya rent. Kama una trade na pesa ya rent, I want to show you another way. But before that, acha tupatie Bwana Isa a few minutes atuambie. Isa, what's up? Yes. Yes, what you do, if it gets to your zone, it must be, sinaona hata huku ilikuwa inafanya that thing. Like here, you see this candle closed before this. But this is not our zone. This is our zone. So the moment the market gets to our zone, if the candle, if we were buying, and then we have a sell candle closing below the previous candle with a body, not a wick, a body, that's a change of character. That's to tell you that because the market is in your zone, the buys now no longer don't have the strength to push the market upward. I hope you have understood. Yes, if the sell candle closes below the buy candle with a body, not with a wick. I hope that's okay now. But disclaimer, it must be in your zone. So you must have done your analysis well. Okay? Yeah. But I want to show you another way that you can trade rent. Wait for whatever it's happening to happen. Yeah, it must be an engulfing candle. It must be. Yeah. So if you are trading pesa ya rent, wait for this candle to wait for the market to rally down. There will be a retest. A retest will be up to which candle? You look for a BB. You see this? That's a breaker block. Are you able to see that? Yes, that's a breaker block. Another one because that one maybe has been mitigated by this, you can use this one, the last buy candle before this significant sell. And then what you do with BBs, for you to reduce what we call risk to reward, there are two ways. Number one, you can trade the week. If mkinifurahisha, I'll teach you a strategy called the psychology of the week. Mkinifurahisha. So what happens is that in an order block or a breaker block, there are two scenarios in trading. One, the base of the week must be taken out and the 50% must be taken out, either that time or later. Okay, so what you do with a trade like this, you can trade the week. You can trade the week. So you know that because it has a very long week, and if you do this trade, you will have risk a lot of pips. I hope you are getting my point. You will risk a lot of pips. So instead of that, two things: either trade the week, or you see the body, where the body of this breaker block is. This is actually another block because it has not been violated. You can start from the body, stop loss at the wick, the far end. Can you see that? So that will increase your risk to reward ratio. So where do you hold your trade to? Of course, to the next liquidity. Which strategy is this, my friend? Sijui kama umekuwa huku from the time we started, but if not, there is a link kwa group, and then we have an introductory class. I think you'll be able to understand it. But this is SMC, smart money. So do you get that point, my good people? Actually, even if you put your stop loss at the 50% of the gun box, you will not be taken out. Na usikue ule mtu wa kushtuka ati iko karibu sana na. Let me show you a trade I did. This thing, it will play with your psychology very bad. I did a trade. Before I show, I hope I saved it. Okay. Yeah, I saved it. Let me show you what happened. So I don't know whether you can see my, because I don't trade with TradingView. I have it here. Can you see my screen? If you can see my screen, perfect. This is funding pimps. This is what I used to trade. Can you look at this thing? Inaweza kupatia heart attack bana. If you have problems with emotions and heart attack, don't do trading. Utakufa mapema. Look at this. Look at where my stop loss was. And I took this trade late, so nilichukulia huku. So this is 9.8 pips, and I did this trade with a standard lot. So that is $98. So that is close to 13,000 bana. Na hii economy ya kasongo. But look at this. Ilikuja because I had done my analysis well. Actually, I could have entered a little bit earlier, but nilitumia that other nini I've shown you. When this candle closed above this, I just took the trade. Can you see that? It was very easy. When it closed after, past this sell candle, I just took that trade and I let it run. Where was it running to? It was running, there was a market gap here. Can you see a market gap here? So at the end of the day, this market actually, hapa ndio nilikuwa nimeweka take profit hapo. Those who are in the group nimewaambia ikifika 6, the trades that I had started in the morning, I closed them. So I look for a retest like this one. Can you see this is a retest? Naweka something we call a limit order. So I will let it rally now even past the gap, because this market I'm expecting it itafika let me show you for 4 hours. I'm expecting this market to come up to huku juu. This is how much I'm a risk taker. But if you cannot take risks, trading is not for you. Can you see where my POI is? So I will rally with this trade for some time, but nimeiweka at least for now ifike kwa hii. This is the external range liquidity. If you can see it, I had marked it, but you can see it. This is this swing high here. That is external range liquidity. So I'm expecting, the reason I've done that is because unaendaga kulala. Imagine kama mtu angekuwa ameweka hii gap jana, on Friday, you could have minted a lot of money. But what I usually do, the trades that run overnight, I usually put or I usually use a very small lot size. Like this is a 0.2 lot size. 0.2, because something can happen at night. Trump can decide to speak and then utapata kimekuramba. That is what happens. So the same thing I'm showing you is what I used to trade with here. Actually, I could have entered this trade. Now I lost because I entered the market late today. So when I got to the market, nikaona it had already broken this candle here. So I looked for another block nikaweka, but nilitolewa. But it's later when I analyzed the market that I knew it will come back and retest this area. And that is how I entered this market. I got like how many pips? Do you nimeitoa ikiwa somewhere hapa? I got about 53 pips. 53 pips. 53 pips. And if you look at this, you can see I've made something. I've made some few dollars up. So, and this is the only trade I took. And the GU played out like nisikia vizuri sana. Can you see this? It hit my TP and it is still, you see the gap was filled 100%. This is to tell you that on Sunday, don't sleep kama mtu ana future. On Sunday, make sure that by 12 uko on. By 12, make sure uko on. If you get this move, if you understand that this is happening, you'll know how to trade by Sunday. I was not on at 12, but immediately I saw this, I did not even think twice. I knew what will be happening. I knew what will be happening today. So if you look at this, it hit my TP and it will buy until you see I have an order limit here, a sell limit. There is a POI here, so I'm expecting that it will come, do its shenanigans, get here, and then we can do some buy. We can do some buy maybe up to this BB here, breaker block here, but hizo ni vitu za usiku, tutakuwa tumelala. Those are night things. So where are we? I think I can just continue with this, but now I'm not supposed to be showing you my live trades. It's not professional. Let's get back here. Perfect. So this was today's. So I've shown you how to trade an order block and how to trade a breaker block, and at least by now we know how to spot an order block. So how do you know that an order block is valid other than the 3 confirmations? Because it's not everything that has those 3 things that is it's an order block. Because let me show you, for example, can you see this one here? Actually, this is what ilinitoa leo. I'm not even lying. I won't lie. This is what made me go. I lost like $200 because of just this one move. Because once you enter the market, the first thing you look at is the last swing high and the last swing low. So this was the last swing low, this was the last swing high. Can you see that? Anything in between here is an inducement, and it is liquidity, and it will be taken out. Okay, anything. That is why even though the market started with a gap, haingeanza kupanda immediately. It must come and look for a reason to rally above. Yes, another block must have a BOS. Must. So if you look at this, if you look at, because this is what I used initially to take my trade, and then ikanitoa, only for me to realize that there is another order block here. So what do? You draw that order block like that. What you do, if you are buying, okay, this must not happen all the time, but for you to increase your risk to reward ratio, if you are buying, you don't use the wick, you don't use that one, you come to the body. You see where the body is? That is where you take your trade from the body of the order block. That is where you take your trade from. If you are selling, the same thing, the body, where the body is. But okay, the problem with this is that sometimes you will miss some trades. You will miss some trades because sometimes the market movers are a bit aggressive, and they will just touch the order block and then they move. But for you to increase your risk to reward, you use the body. You use the body, especially if you have the right order block. So where do you target? Maybe you target the last swing high, like that. This is 44 pips. This is a risk to reward ratio of 7:33. By the way, my mentor told me that I should not take any a trade that is less than 1:6 RR. 1:6 RR. I know most of you take trades of 1:2, 1:3. It's good if it's giving you money. Or if it's giving you money, it's good. But as for me, if you look at all of them, I don't take any trade that is less than 1:6 RR. 1:6 RR. So what I do, I minimize my losses. When we get to top-down analysis, you will see how you will be able to be spotting this. And because there is a way I can even go to, let's say I go to 5 minutes, and I will still do what? Can you see there is an nene here? A breaker block here. You can see the breaker block. Can you see the breaker block? So now this one you have to use the wick. So have we reduced something? Okay, not yet. Let's go to 5 minutes. Let's see whether we will get something of 5 minutes. Here it is. You see, you can refine it to this breaker block here. And you see, confirmation is there is FVG. There is FVG here. Let's see what is happening for 3 minutes. This is the beauty of SMC. This is the beauty of SMC. So you can even refine it to that. So let's see whether you will save some pips here. So if you take it with that, this will be how many pips? Yeah, because this is a small order block and there is FVG here. Although I usually recommend don't trade FVG. That is my recommendation. You can, if you trade it and it gives you money, that's still good. But as for me, I don't trade FVG. So you see, the only disadvantage with refining entries is that you miss some trades. The only disadvantage. So the best thing is to use what I've told you. Once the price gets to your zone, wait for the change of character and then take the trade. Take the trade without even thinking about it. Ukitolewa unashukuru Mungu. So all these small order blocks here are inducements and they will be taken out. My trade here in the morning, I remember when I did not even, these things are crazy. I did not even check, by the way. I just got into the market and I saw the gap. So I knew immediately that this gap must be taken out 100%. So I took this trade using this BB here and I targeted this high. So I want to show you how tunafanyangwa na wazungu. So when the price got here, you can see how this thing reacted. Okay, it was somewhere there. So it was somewhere there, so it was coming down. You can see how it reacted. Immediately it got to the breaker block or to the order block. ilianza kupanda. This was ilianza kupanda, tukaenda like this was a people too. This is 1.1 pip. The market reversed on me and it took me out. Kama uko na sukari unawajeka hiyo siku. So the market did that thing, but finally I recovered. I recovered here. So this church we are talking about, number one, we've said that you only trade this if the market is in your zone. The market is in your zone. For example, let's say this order block here is our zone. Okay, and let's say, because now we don't know what is happening here, so that is where the market is. And so the market, we expect the market, when it comes back to our zone, what it will do is that it will rally up. So when the market gets to our zone, what we want to see is a change of character. We want to see this market or a bullish candle close. You see this one, hii ndio tunaitaga aggressive entry. Can you see that one? So we know that the market has changed character upwards. So we know that the market is supposed to go long. So if this was me, I could have entered this thing there. Okay, immediately this candle closes after this. Where do I put my stop loss? Now remember, this is what we call aggressive entry, and with these entries I only target 20 pips. Okay, I posted this on the group today. With this kind of entries I only target 20 pips, because the market the main move will be from the retest. The main move, because of course if you enter this market here, it is not in your zone. I hope I'm not complicating things. If you enter here, this is not your zone. You have to enter the market within your zone. So with this, I only target 20 pips. But I said, if you are trading rent, wait for something like this. This is inside your zone, and then the market has changed character here. That means this candle is closing above this candle, and if you check, the body of this candle is past this candle, but you can still wait for this candle to close. You can wait for this candle to close. If you look at this, it has closed above this candle. It has closed above this candle. But with this, you have enough confirmation, because the body of this candle has closed above the body of this candle. So what you do is that, because of this to reward, you enter that market there. Stop loss just below that candle. That is like 6 pips stop loss. And then I showed you something called average true range. Nani anakumbuka hiyo? ATR. We remember average true range. So you just come here and check the few past candles. Zilikuwa zinafungia wapi? 13. So you know If you put this your stop loss at 13, you will never be stopped out. This is how this thing is important. So if you put that at 13, you will not be stopped out, because that is the average the market is doing. What do you target? Depends on your strategy. You can target 1:2, 1:3, 1:4, 1:2, but all my trades are not less than 1:6. All my trades, even the ones I target 1:6, even the ones I target 20 pips, it must be above 1:6. So you use the average true range to know the average stop loss, or the average candle is taking how many pips. And most of them, if you take the last 5, it is 13 pips. None has got past 13.3. So if you can do your stop loss at 13.5 or even 13, you will not be stopped out if it is in your range. If it is in your range, you will not be stopped out. And then you target this high, because you know we should be buying. Just target that high, and yes, it will be taken out. This high will be taken out. So Mr. Isa, you have a question? Yes. Yes. Yeah. Yes, zitatolewa zote before the market makes the main move, because the market would be making some few moves. You see, like this move, this is someone's take profit, because there is 32 pips. You see that? But yes. Yes. Oh, I get your point. So this is what you do. There is something called top-down analysis. I know we know what that means, or at least we have an idea. Top-down analysis, for example, okay, this is another. Let me show you my live account so that we understand this. Okay, flooding pips. So you can see my flooding pips, eh? So for example, if I start with weekly, there's something here. I know that this is the highest I'm expecting the market to go, as I have saved it, or I have analyzed. So I know that once the market gets here, it will start to do what? It will start to sell. That is weekly. But you know you cannot trade weekly. So you'll go to 30 minutes first, or 1 hour. So what is the second thing I want to say? I have a POI here. Okay, this is an order block. We can see that this is an order block. So because this is the order block that I am waiting the market to come to, and this is the low I'm expecting the market to take out, that means I will consider this high and this low. Now, I hope you have understood that now. So I will not consider these ones because I'm interested in the market coming into this order block. So that means the order block or the breaker block that you expect the market to come back to will be either your swing high or your swing low, and then you take the opposing swing high or swing low, what we call external range liquidity. Have you gotten that, Isa? Yes. What you do, you want to, once you do the top-down analysis, I think it's something we need to do so. Once you do the top-down analysis, you want to understand the overall bias of the market. Once you understand the overall bias of the market, you are not now interested with what is happening here. You are interested in what is happening with the price currently, such that if I see this swing high and this swing low, I want to know what am I expecting next. Is it the market to take this high or the market to take this low? So for me, from my analysis, I'm expecting the market to take this low. So because this is now the protected high, this becomes my swing high. Now this is the week low and the all-time low from where the market is. I'm expecting this will be taken out. So if I'm a conservative trader, I couldn't be looking for this bias. I could have waited for the market to come to this my POI and sell, and then I come and target that low. That is how some traders trade. So in the market, Isa, you look at the current, where the market is currently. Do you get that? Yes. Good. So you look at where the market is currently, not where the market is has been running. Now for me to take this trade, for example, for me to take this buy, I have the bigger picture in mind. I know that this market must come to my POI. So I would be stupid for this market to come here and then I'm looking for buys, because I know this is the main obstacle in this market. So when the market gets here, I'm expecting it to come down and take out this low, because this is a weak low. This is a weak low. This one. Hii ndio the main POI ya buy. Naona nimeipanga huko. This is the main. So all these lows and all these order blocks will finally be taken out. They'll finally be taken out. So do not consider, when you see this order block here, from this swing high to this swing low, don't consider these small order blocks, because they will be taken out. You trade them with a lot of caution, because they will be taken out. But right now, I hope you know, leo kulikuwa na two main news za GBP USD and Euro USD. I did not even bother, because I knew even news, except now for CPI and this other one inaitwa nini, CPI and that other one, those ones do not respect strategy. But these other small strategies, news, even if it's red, once you do your market analysis well, they'll usually respect your strategy. NFP, yes, NFP. NFP and CPI, they don't give a damn. They will wipe your account. But these other small news, they will respect your strategy. So once you understand the overall bias, you are not interested with what is happening here. And then if you remember, I showed you how you should do your daily trades. For example, because we said there is something called what? We said three things. We said accumulation, manipulation, distribution. Can we remember that? I know we remember that because that is the most recent class we had. Perfect. So we said once you enter the market, the first thing is to do what? Mark from 2 a.m. to 7:50. Mark from 2 a.m. This is where 2 a.m. is. Yes. To 7:50. 7:50. So we can see that mark from 2 a.m. to 7:50. Between 7:50 and 8, which is here, check if the market, the London Open, will take either of these highs. If it doesn't, extend and wait until 9 a.m. So I can remove this now. 9 a.m. So once you get to 9 a.m., be patient. Wait for the market to take one side of the Asian range. So which side was taken out? This one. This one. So what do you do is to wait for this change of character here. Have you seen that? You wait for this change of character. You will wait until because this is the high and the low, until the low is taken out. What do you do? Okay, we said this, that once one side is taken out, the other side will be taken out, and this happens almost daily with GU and EU. That is why I love the pairs. Sipendi USD JPY, inanisumbua sana, but GU and EU, my god, nisa tatu already. Okay, give me 5 minutes. GU and EU, it will happen daily, almost daily. So once this was taken out, and then there are other things that will help you understand where the market will reverse from. For example, we have an order block here. These things, by the way, they are not random. Nothing is random in the market. Nothing is random in the market. So the moment the price hit our order block, it is sold. Na niliwaambia, sometimes the market makers will not give you a retest. If you can look at this, there was no retest. Immediately the market hit, they will leave there with a thunderstorm speed, because they don't want you to make money. They don't want you to make money. So if you had spotted this, I did not read this, bado nilikuwa nimelala hiyo ama sikuwa nimefungua charts. If you had spotted this move here, you could have gotten, because this is where you could have taken your trade. Short position. Where is your target? Your target is the Asian low. Can you see that? That's a 37 pip move. 37 pips. And it has a risk to reward of 1:6. You could have gotten that move like that. And then wait for this other move. Hii yenye nilipata. This is the one I got. Because the moment, I told you that the moment the market takes out liquidity, it has no business going back there. So the moment this market took this liquidity, if there is another block here like this one, it has no business coming down again. It will go up. Now what has happened? This market has taken this liquidity. Can you see this? Because the moment this swing high was created, it has liquidity. It has also taken this liquidity. That is why I'm expecting immediately it gets here. Immediately, it has no other business. It will start selling. And actually, it is possible for this market to sell without me. I know that. I know it. I know that. I know it's possible. Because it has enough liquidity with it. It has taken these highs. It has taken these highs. So it can go back without me. But because I had done my strategy, or because I had done my what is it called, my analysis, if it goes without me, I congratulate it. But it has to get to where I had said it will get. If it doesn't, well and good. So if you trade this is the easiest strategy you can use in the world. I dare say that. Let us look at what happened in Geo. Let us see what happened in Geo. And Geo, I'm still making money. Isipokuwa ni pesa inakuja kidogo kidogo, but it's okay. Look at this. The last thing I'll say, and then we close. So let's say you did mark this up to 750. You mark this, that is the highest high, up to 750. $750 is there. So you wait, be patient, wait for one side to be taken out. Which side was taken out? This side. The next thing, look whether there is any order block. Actually, GU is crazy because GU, this was liquidity. The only order block that was here, and I got it very nice, is this one. Can you see this? It had taken out liquidity. It had a change of character, and it had FVG. So I knew this is where the market will come to. Can you see all this move? Because this was a lot of moves. I rarely trade this. This is 66 moves. A 66 move. So once the market got there, I will buy. So where am I holding this buy to? If you are a conservative trader, you hold this buy until where we have the buy side liquidity here. You see this one? You will tell me by tomorrow if this one will not be taken out. It will be taken out. I'm confident. Well, if the market decides otherwise, now that is not me. But I'm telling you what happens daily. This will be taken out. And then, what is another confluence? There is a gap here. The market will never go without filling this gap. At least I was doing some back testing today. At least 60% of the time, it will take out this gap the first day. Close to 80% of the time, it will take out this gap the second day. And close to 99.9% of the time, by the third day, this gap will be filled. So that is why I'm confident that this thing will just go up. It is going up to where I have, let me see 1 hour whether I'll be able to see. I have a POI. I have a POI. Can you see that? This is a POI. That is why I'm telling you, these things are not random. Everything that is happening is not random. It is not random. And then we have something here. This is liquidity. This is liquidity. So I cannot feel anything bad holding this trade overnight because we don't have any significant news. But the trades that I do overnight, I do with a small leverage, like 1:2. Like this is like 0.2. So even if it reverses on me in the night because of any reason whatsoever, I will not. It will not wipe out my account. So I hope we understand that. This is one of the easiest strategies you will see on the internet. Easiest. Like that. Easiest you will see on the internet. With that, I think I am done. So we can wait for tomorrow. Today I lost some trades and I also gained some trades. If you look at, these are the morning trades that I traded. I lost a few, but then I still gained. This is the game in Forex. You will lose and you will also gain. Every trade you lose is a learning process, and every trade you win unapeleka watu lunch. That's it. Unless there is any other question, I think I am done. So those of us that are following us on TikTok, I do these classes, mostly twice a week, free of charge. You can send me a DM or click the link on bio. There's a link on bio, you can click, and then I'll add you to my group. So with those few remarks, see you when he minus 19 ikifika 200 kesho. Good night.